elbow. Got a trucker. Broken. Some suckers. Got hustlers. We got fire. Really burgers and all. It's tough. This won't be ways. It ain't too far. Not too far. Thin short skirts. You got high test. Look comfortable. Redneck. So we got love. Lots of poker. I've even seen fancy poker. And bar. Oh, you got 4 seats. You got the man. Old G-box and you got waitresses. We got bar. Dumbass and a lot of guys. Number 672. Wow. To San Francisco for the Labor Day weekend show.
I got my hush puppies on. I guess I never was meant for glitter rock and roll. And no day I didn't know that I'd be back come Monday. It'll be alright. Come Monday. You're home and it's time to get home. And I just want you back by my side. Yeah, it's been quite a summer. Rent a car, it's a westbound train. And now you're off on vacation. Something you try to explain. And all the time, so that's the reason I just let you go. Come one day, it'll be alright. Come one day, I'll be holding you tight. It's been 4 lonely days with the brown days, and I just want you back by my side. I can't help it when know that touch part of me now. Remember that night in Montana, you said there'd be no doubt.
Good morning, everybody. Let me get the prep up there. We'll get started here in about 5 minutes, okay? Hope everybody's doing well.
California has won the content. I just can't wait to see you. Day took me all night. Come the day, I'll be home and you. And I just want you back by my side. I'm gonna go the day. And I just want you back by my side. We do keep you inside. Lose your love, leave your mind behind, baby. Stand up and go. The sun's up. Yes, I have to go down. Sleep, but it's still digging like a fire. Sleep is in your feet, and they eyes like fire. Sickle, it sounds so sweet, with the silence and it go. We go so high, the light of the night, make everything go right. Back. guess I'll have to go now. It's all down in Mexico.
Good morning, so. Were you able to get that ES trade last night? I don't know if you stayed in it. I know we posted it on our Discord room.
Wish out.
All right, everybody, we'll get started here in just a moment. Get our prep screen back up. Wow, nice job. Yeah, there was very little risk on that trade. You are just doing amazing. Exciting to see that. Oh, trying to figure out why my camera wasn't working. All right. Get the music ready. Happy Friday, everybody. It was a good evening for a lot of us trading last night. And throughout the week, we've had some very spectacular days in our live trading room and in our community trading room sessions. Utilizing what you see right on the screen right now, our daily overview today, February 6, 2026. Okay. The prep screen zones have been updated. Okay, so these are key levels where we anticipate price to change direction. We call it supply and demand areas. We're expecting that turning point. One thing that was really instrumental this week was just watching the news headlines. Now, some concepts here to understand the news. It reports something that's already happened. Okay, not what's going to happen. It reports what has already happened. So when you start going through the news this morning, it still has kind of a overly bearish tone to it. Oracle suffers worst, and here's the key word, 8-day stretch over 2 decades. Okay. Now, very key point. When these things are pointed out, Oracle stock down 8 days in a row, indexes down 5 days in a row, often the 6th day or the 9th day are typically up. Now, what I mean by that is when you start looking at your charts, you see that on average, you see that they're grouped in up days versus down days, and the numbers are, well, Fibonacci numbers. 2s, 3s, 5 is common. 8 is rare, and 13 is extremely rare. So when you look at a headline like that and says, wow, we've had 8 down days in a row, well, with a very high probability, we could expect Oracle stock to be up today. And let's just take a quick look at that. Okay, let's come over to stock. Microsoft on sale today, yesterday too, as it dropped into that demand zone. And ORCL, look at that, up $2.22, waiting for the chart to update. And as we bring out a daily chart, notice Oracle dropping right back down into this range here. Okay, so we're already up $2 on it. Let's get the little doji candles on there. Okay, so we don't have on the daily chart. Let's try 480 minute. We're going to isolate that leg base, leg base. There it is. Okay. Yeah, probably could bring it in right in this range here. Once we alter it just up or down a minute or two, we can see that the leg base, leg base. We can also see that there was the added part to that where we have the resistance and then of course our buy territory. This is all what we teach in the Mastering the Charts Part 1. Okay. That picture over here on the left-hand side of the chart helps us anticipate that turning point. Okay, or an area where we suspect there's going to be opportunity for buyers, a footprint. Okay, and we see that it hit yesterday, and let's see if I can get that pre-market on there. Let's do pre and post. Yeah, we can see the price is already bouncing off of that. Okay, very significant. Absolutely pretty cool stuff. Okay. Now, as we come back to the great overnight session, now this is going to be kind of tough for later today, and I want to point this out because we've been talking quite a bit about the AMD approach, okay, which is really just a smaller time frame of what Richard Wyckoff put together back in the early 1900s with all of the legends of Wall Street. You know, he produced some really, really great content and shared it with everybody. Okay. And it's like a map and how the sequence of events happen. Okay. And what we've been using is for intraday and trading futures product is we also combined the Asian London session. What happened during the Asian London session last night? Okay. Well, last night, those Asian London sessions expanded. Okay. Now, what that leads us to is when the London session closes around 9 a.m., or sorry, about 12 p.m. Eastern. Okay. We may expect the end of the trading session today to be choppy and sideways. Okay. So just getting a more of a visual picture on this is the sequence starts with the accumulation. Okay. The accumulation is kind of the signal to watch for the manipulation down or the manipulation up. Now, there's opportunities in the manipulation, but it does create a little bit more risky environment. And what we've been doing in our live trading rooms and will be doing today is during that manipulation phase is we're downsizing our positions. We're using a fair value gap entry and just taking small trades during manipulation. Once the distribution phase starts, we see that the trade entries are pretty smooth. Okay. You can start off with using a leg base entry, but then start using the fair value gap to enter as the trend makes its way back above accumulation. This is an amazing technique. Okay. I don't want to imply it's a trading strategy. I want to imply, let's see, it's 2026. Let me I got a couple of schematics out here that I want to imply that it's more of a map. Okay. And you will find in our sessions when we're doing live trading and when we're doing our community room is we spend a lot of time on the picture on the price chart because every trader is trading based off of the picture on the price chart. They may not realize it, but they have a feeling, and feelings are ultimately generated from shapes and patterns. Okay, so when we understand this sequence of events, it then puts us at a strong advantage to understand why the market's going up, why the market's going down, and what to look for. The accumulation area, resistance and support, that sideways choppy market is not always the easiest to trade because you're always expecting a trend and you may stay too long. Okay. But it is a signal of what to happen for that manipulation phase. Okay. Now, as we are seeing this play out right now, we had a very nice accumulation area, a opportunities for that manipulation. And then once we started to see and anticipate, okay, so take that range. And this was another tip, okay? Take that range, and very often when you see a 3-to-1 move away, okay, or greater than 3-to-1, okay, that's when to start expecting the distribution to come in, okay? And it is absolutely fascinating to see the map. The map allows us to then choose how we will enter and how we will use trade management, okay? This is a very simple concept, but a lot of the times we are using the wrong entry strategies and staying too long during that manipulation phase. And then we catch a distribution phase without knowing what's going on the left-hand side of the chart or what led us to this. And we never make that connection of when is the best trading environment for your style. Okay. Now, some of you during that accumulation are excellent scalpers, and some are excellent breakout traders, but knowing when to take a breakout, how to splice into that move, is another big piece of what we're looking at in the marketplace. Now, as we go through and start our pre-market routine, and we do have a class coming up in our pre-market routine course, okay? And it's going to be covered over a couple of days. The recordings and handouts will be available after. And I still have about 4 more topics that I need to update on and include in that. We're always learning about the products. What's the average move down, average move up? What's our prior sessions range? And what's the Globex range? Now, just an example here. Yeah, Matt, accumulation, distribution, accumulation, manipulation, distribution. That's the AMD. Yeah, Microsoft did well with that. Okay. And let's see. I think we had that picture up there. Yeah. So, one thing. You'll love this, Matt. Okay. When you go back and start finding and verifying your 100 picture perfect past trade setups, accumulation, manipulation, distribution, I want you to notice that during that manipulation phase, you look up and you look left for the leg base zone. Okay. Or down and left for, because when that manipulation starts, so often it aligns with the leg base. That's why we have that slight double bottom with a higher swing low. Okay. You can enter the first time as it hits a leg base. manage your risk that way. Or you can wait for confirmation of the turn and use a fair value gap. Absolutely amazing, okay? When you know what type of trade to look for, okay? You know how long that manipulation is supposed to last. And just as we're looking at this, I think we have nat gas, okay, which is in the manipulation phase, which is really kind of tough on my style of trading. It's tough for trading, okay? But as we look up and left around this 3.6 area, okay, let's see if the manipulation is done. And you go over to the left and you look for the leg base group of candles. We can see it right here. So it is possible that manipulation is done and we are starting distribution. Okay, nice little leg base group of candles. It doesn't matter the time frame. Okay, price hit it. Okay, then now we're looking for distribution, and in a distribution phase, price generally goes past that accumulation. So what we're waiting for is either you took the, I didn't get this trade, okay, obviously. Here we had a fair value gap, okay. Oh, nice job. Yeah, try a little bit larger time frame on Microsoft. The daily chart had a beautiful leg base. Okay, and also the 480-minute chart did as well. And the same thing is going on right now with Amazon. Okay, Amazon pre and post market. Okay, looking for the leg base right about that 191, 179. Okay, and as we, it's not as clear as what we saw on Microsoft, but we did have the, and I do want to, you're bringing up some really cool stuff because there's some details here. You know, sometimes we have the that support and resistance. You'll have three touches um, on the left, and then three touches on the right that makes that range. So part of what we're looking at when we're putting together accumulation and distribution, okay, or the accumulation, okay, is that we're looking for a minimum of three touches of support, three touches of resistance. And this was throwing me off for a while, is because I would say, well, it's this one. No, it's this one. Okay. But when you qualify your areas, you get some very specific detail, which can throw you off finding that accumulation. And now we're looking at manipulation. And from that manipulation, we're looking for the leg base group of candles. Okay. So cool stuff. Cool stuff. This is going to be part of our pre-market routine that I'm going to bring in. It's one of the extra little chapters that we're putting in there to help people see that picture on the price chart. Okay. So let's get out to our stocks for a moment. We just did nat gas. Let's come back here, and looks like we are now about 2 minutes away from completing the three candle pattern for a fair value gap. Okay. Now we are in the distribution phase of this natural gas. Okay. And the fair value gap, that three candle pattern, okay, which is another great visual technique, okay, for trading in momentum. Okay. So what you wait for is the three candles to form. You got the fair value gap, and then we'll look for that trade entry and protective stop loss at the high or low of candle number one. Okay. Now you may say, well, that's a huge stop loss. I can't take that risk. Okay. You might be able to take it with 1 micro. Okay. Because if risk is determined by the trader most of the time by dollar amount, not by the picture on the price chart. Okay. So if you normally trade 5 contracts, 10 contracts, you go, oh, that's too much dollar amount risk. Well, if I size the position correctly based on my dollar amount of risk, then, my position size might be small, but it is a successful trade. Okay. Yeah. Let me know in the Discord room, Matt, if you have questions about this, because so many of your stock charts, they show exactly what we're doing, and I think you have a much higher level of confidence in the trades, um, knowing where you are on the map. And that's what I'm using the AMD approach for the map. Okay, we don't trade on the map or drive on a map. Okay, we use it as a guide, and we look for the characteristics that repeat over and over again. One common repetitive is the sideways choppy market. The manipulation is what I compare to, like, if I'm playing basketball, I have the ball and my opponent's coming at me as I fake left and go right. And that's what typically happens. The better trade is dropping price to shake out all the buyers, okay, and then go right, fake left, go right, fake left, go right, so to speak. Okay. You really get a clear picture of what the banks and institutions are really trying to do. And they just did a fantastic job with that on the paper side of the gold and silver. All right, so let's apply this. So I got a fair value gap on natural gas. Okay, the equity indexes are well underway, and we're gonna have to wait for the higher time frame to get a decent pullback for safety. Okay, so I'm not so focused on the equity indexes at the moment, other than the trades that we are already in, okay, and participating with. Okay, so where were we at here? Natural gas. So let's set the trade up. Remember, our risk is the high of candle one. Okay, so our stop loss, 3.631. Trade entry is right at the proximal line of the fair value gap range. Okay, so the way we set that up, 3.575. I'm just going to start off with 1 micro so I can actually see the dollar risk on that. And I'll come up and we'll stop loss will be at 3.631. Okay. So if I have 1 micro, I might add on if it still fits within my risk parameters. Okay. Now you might say, well, it's no fun trading just 1 micro. Well, we're looking for a price move below this accumulation. Okay. So we look for, down on the other side, we look for that leg base group of candles. You're going to see so much of the things that we taught in Mastering the Charts Part 1 and Part 2 are just, they play so well into the map. Okay. So our profit target is going to be about that 3.398 as using the debt space, we call it, or the accumulation area, is we expect price to go through this area fairly quickly. So we do have a trade set up on this right now. Once I'm filled on that trade, I'll come back and see if I want to add an additional contract. Okay. Now, just to kind of give you a heads up on what we're doing here is that when I look at a trade idea, based on my trading plan, I'll allow about $300 max risk per trade idea. Okay. I start off with half of that because I'm expecting a good size price move if I get my entry. Okay. So I start off with about $150 worth of risk. And that might mean that I can add one or two more micro contracts to that. Okay. So anyways, let's keep on going. Crude oil. Notice 60-minute chart has that sideways accumulation. Based on the crude oil report on Wednesday, the API and the EIA report showed that there was a huge surplus. Okay. Very huge surplus. We also noticed that on crude oil, let's see. Oh, I don't have it on this one. Oh, it's right here. Yeah. The daily ATR is 2.36. We compare the Globex range to the daily ATR to help us understand what type of trade to look at. Okay. Now, with the Globex range being wide, we are looking for that bull trap and bear trap. Okay, so we're looking just below the Globex low. We'd come over to the left and we would look for where we might find that bull trap or that bear trap. Okay. Now in looking over here, I have another area of accumulation. Okay, which is now putting the potential profit target much lower. Okay, into a zone. So we're looking for an opportunity on crude oil. We have a profit target of $60.68 to the downside, and we're looking for a place where we can enter that trade for that move. Now, that move down would be in what phase? Yeah, it'd be in that manipulation phase. Okay, so how do we trade the manipulation phase? Well, we use fair value gap entries. Okay, we size our position smaller because it's a little more volatile. Okay. So knowing the different phases of the market, we're able to change our trading plan to give us more safety and higher profit potential. Okay. All right, checking natural gas. We'll be waiting. We're 5 minutes away from the market open. Let's bring back up the S&P. Dropping down to the 5-minute chart. We're doing some consolidation. Let's take a look at, we have a number of Dow stocks that are greater than 94 cents, which is 16 Dow stocks positive over 94 cents and 1, 2, 3 negative. So that's 13 times 2 would be 26. Cash equals 26 right now. Futures are trading at 36. S&P futures are overbought relative to cash. In the context of an uptrend, we look for price to pull back into a demand zone or into a fair value gap, in this case, to make a trade entry. Now, we are expecting some volatility. Why are we expecting more volatility around the open? We don't have economic reports, but we may see some whipsaw. Look at the volume on the Dow 30 stocks. By assessing the volume each day, whether this is light volume, heavy volume, or normal volume, okay, you got to check it every day to know what that is. If it's excessively light volume, then the volatility at the open can be much greater. Only because it's, the markets are doing what they call is price discovery. Okay. And right now we take the number of Dow stocks positive over 94 cents or negative over 94 cents and net the results. Take that net result, multiply it by 2, and that'll give you a fair value of cash. Okay. Futures follow cash. Okay. If cash remains the same at the open, then futures will adjust down to meet that cash. And right now they're going to potentially adjust down to about that 26 level. Okay. Which is not too far off. It's about 8 points. So if we look at where 8 points down is, or around that area, 8 points minus 54 puts us at, right there, right back at that support area. Okay. That's where cash and futures are balanced. Okay. Now, this is a place where we would expect price to change direction and go back up, but that doesn't mean we have an entry right there. That's not what I'm implying. If price comes down here and holds, then I'll look for a fair value gap to form and work my way back in. Okay. So we're still about a minute away from the open. Now, we also notice that I have the time remaining in a bar. Okay. And that's on the chart. If I'm going to complete a fair value gap, I need at least 3 candles. That's 15 minutes worth of time to form a fair value gap. Then on the fourth candle, we wait for price to come and tag the proximal line, and then we place our stop at the low or high of candle number one. Being very specific, okay? And I think you'll find once you understand entry types, whether it's a leg base entry to catch the first bounce, or if it's a fair value gap to catch the ones as the trend establishes. Okay. And it's going to take a little time to uh, learn to trust that. Okay. Okay, so we do have S&P. We got a little volatility, a little sweeping back and forth, and now we're starting to see the volume pick up a little bit on the Dow 30 stocks. And we see Amazon is shooting back to the downside. Now, what I'm assessing, okay, is that once Amazon does get to demand, okay, once it comes down to demand and starts to turn back up, that's when we're going to see our trend start to pick up, okay? Now, as we're watching the market open with a drop like this, are there going to be some margin calls? Are there going to be some profit taking? Okay. Are there going to be some panic selling? Okay. All of that's occurring because of the price move, 10% move down. Okay. So we still have on our equity indexes approximately 15, 20 minutes before we get a tradable entry. Okay. So as we're watching and waiting, okay, for this setup, a fair value gap to enter the trade, we can go and look at the other equity indexes and see if we have the same scenario. Okay. On a 20-minute chart on the NQ, I'm looking at a fair value gap around 24,645, 24,602. If Amazon drops down to 291, okay, that's going to give the market some or the index a little flexibility to come down and find that demand. Okay. All right. I'm going to have to shut my camera off because it's taking up some of my resources on the chart. Okay. All right. So as we are watching price come down, I can plan for my protective stop loss to be at the low of candle one. See, I've got candle 1, 2, and 3. My stop loss will be right around this area here. Okay, the low of candle number 1. That's my initial stop loss. We've noticed that the uh, the data has been slowing up quite a bit during the opens. Another thing that I'll point out here, since we have the daily chart of the NQ, look what it did. It touched the 200 simple moving average. How many days have we closed below the 50? And notice the 20 moving average crossing over the 50. That's usually when we get a nice sizable bounce. Okay. So we're looking to get in to play back up to the 50 moving average, the 200 moving average on the daily chart. Significant place to defend. Okay. But we're still planning. We still have time. Let's go back to S&P. Oh, wow. Beautiful. Now, the direction that we're in, okay, and hopefully if you're not trading this, and technically you really shouldn't be unless you were in already, okay? Look at the information we're sharing with you. Why were we expecting to go long when we had so much of that negative news? Okay. That's a beautiful trade. This position is only 2 micro futures contracts. Okay. I think only 2. Yep, just 2. Okay. Our targeted range or profit potential is 69.70. Now, it's going to take a little bit for me to get back in, and the next trade entry is going to be potentially a lot of risk. Okay. Are you still in this, Silk Stockings? This got to be like winning the lotto. Oh, boy. Beautiful job. Okay. Okay, let's keep moving on. Dow. Yeah, just 2 micro contracts on that one. Now, I don't mean to show you the trades. I mean, I know it's kind of frustrating when you just see all the trades that the instructor is doing, but you know, the trade entries, this was the entry this morning, a fair value gap, it pulled back. I don't get to time the entries for when we're doing a live stream. Okay, I just trade the charts. I want to demonstrate our trade entries and what we look for. Okay. Hopefully you're picking up on the lessons involved and not just getting frustrated that, oh wow, he's making money, but I'm not. Okay, we'll get there. Okay. We just have to have the right entry. Okay. But sometimes we take trades before we start the analysis. Now, another key part of this morning bullish intent was the VIX was trading lower by $1.50 in the pre-market. The fear was leaving. We had extreme fear in volatility. Okay. We also see that the tick and the tick Q are remaining high for almost now 10 minutes. Okay. Where there's a lot more upticks over downticks. We see that the advancing issues over declining issues are in that extreme. But we do see that the trend has dropped a little bit. But yesterday, leading us into it, the trend was above 1.5, which is on the bullish side. Extremely bullish is if it gets above 2. Okay. Market's dropping, trend is high. If the trend is high, it's time to buy. Okay. VIX high, time to buy. There were clues yesterday in yesterday's session. That's why we were aggressive trading the evening session in order to participate. Okay. Crude oil is still awaiting a trade sub. We're try to stay out of the dead space that between that support and resistance. Uh, Wait for the setup patiently. That gas, we're still waiting. Our gold trade is working out beautiful. 2 micros on that. But I need to look at taking a profit. We are back above that accumulation area. Okay. Another big factor about bringing in this was a paper loss on gold and silver. It was not the spot. Okay. You go out to the US Mint and get a price level on what gold is trading at. Okay. Futures follow the cash market. The spot price for the US Mint is pricing gold and silver. And that price level is still very high up. Now, yeah, futures did get crazy. Okay. But a lot of that was manipulated by the big players, which caused the futures to become offset from the spot market, the physical market. And right now, the futures are returning back to the physical price levels. Okay. Now, it's going to be kind of hard to splice into this move. Okay. And just realize where we're at, where we are on the map and what we're putting together. Okay. We're about almost completed a fair value gap. Okay. So our next entry, if you're going to trade the gold, okay, entry at 49.47, stop loss, because we're using a fair value gap because we're splicing into this trend. Okay. I should have held that one on, man. I got into silver right down here, or sorry, gold. I got into 2 micro contracts down here, and in my other accounts, the ones that count, and I got out thinking, oh, okay, I'm going to get out of the trade now, and this was in the overnight says I got out right here. Left so much more on the table. Wah. It was a good night last night. I also want to point out, it's in observation. Once the market reopens after at 6 p.m. Eastern, between that 6 p.m. Eastern and 6 and 6 between 6 and 8 Eastern, okay, there are some really good trading opportunities on gold. Very good price moves. Okay. All right, I'm going to take profit on this one
Order
just so I can demonstrate what we're doing. Okay. Now, from 49.47 down to 49.16, we're looking at about 30 points. Okay. 30 points. That's 300 ticks. Oof. Okay. So even trading 1 micro is going to be stretching outside my risk parameters. Okay. Waiting for price to come down, 49.47. I'll place an order to go long. I'm going to change it to 1 micro. And once filled, I'll place my stop loss at 49.17. So it'll be about 30 points risk on 1 micro. Okay. NASDAQ. Okay, still waiting. Notice that on the higher time frame, we haven't created a place to get an entry yet. And on the 5-minute, we do have one. Okay, we need to look for a price to come back down. Now, if you're looking at the clock, you're going, wait a minute. This is what we talked about. It was going to take about 15, 20 minutes for the market to set up. Either make a fresh fair value gap till we could get in an entry, okay, or wait for the next one. Now, the nice part about this one on the NQ is our candle number 1 is a little bit closer to the stop loss. $24,747 stop loss. trade entry, keeping the contract size small because we know where we're at on the map. 24,816. Okay. So I have a place where I'm going to place my protective stop. I'll just put it on once I'm filled. Okay.
Order filled.
Oh, we got filled in gold. All right. Stop loss. 49,000 or 4,916. I'm just keeping the numbers around. Oh, there we go. Now, what I've noticed is that's outside my risk parameters. Okay. See, the moment you realize that that's your risk on this trade, okay, you now have to make the decision, are you going to stay in that for the potential reward? Now you're already up, and then you realize that, man, if we go all the way down here, that's going to be an old crap moment, okay? And you're not going to like that stop out. It's okay to take a small profit, okay? You have a plan. You knew that price was going to come back down. Well, you were shown that there's a fair value gap, context of an uptrend, more upside potential. Okay, you were given a good pre-market analysis of what to expect. Okay, if that risk is outside your trade plan, even with one micro, then you may want to step aside. Okay, and wait for another smaller risk trade to come into play. Okay, that's your choice. For me, I'm going to grab it
Order filled.
and wait for a next trade setup. Okay. I may be leaving a lot on the table, but once you realize that your risk dollar wise is outside your trade plan, you have to make a decision. If you make the decision to stay, then own up to it. Okay. I kind of remember the phrase, that Zig Ziglar said one time, if you got to eat a frog, you don't stare at that sucker too long. Okay. So it's okay to get out if the risk is then too much for your trading plan. Hooah. All right, we're still looking for our profit potential back up. I am really excited for Silk Stockings. She's one of our newer students, and she's just been following along, doing fantastic. I posted this chart in our Discord room last night. It's at the start of it. I was preparing to, here it was. Here's what's the start. Okay. ES approaching say trade setup entry is 67.82. Stop loss, the low of candle one, just as we're talking about. Then I stayed up a little longer than I should. We got the turn. I got my stop in place. And this is what we woke up to this morning. And this is where we're at now. Beautiful. Okay, now there is some potential sellers. Old resistance or old support becomes new resistance. Okay. And we have a new fair value gap. And if we're looking to go long, our stop loss and potential entry, this is splicing into the trend, 68.76. Okay. Our profit potential is back above the 50-day moving average, 69.70. Dow, Dow has made it above that prior session. I'm gonna take that out.
Order filled.
Most of the reason I took that out is because I've got too much to watch at the moment. Too many open positions. What's gold doing? Okay, just holding out. Okay, that gas. There we go, coming right back up to that fair value gap area. Okay, once that is triggered, we'll be short. We'll be looking for the profit potential. Are you starting to see that this is a forward-looking technique? We're not looking at indicators or oscillators or, okay, fancy stuff. We're just using what the price pattern shows us, okay? Robert, I have my other accounts, they're over here, okay? Just to be clear, I am using when I teach, okay, when I'm doing presentations, I do a simulated account, okay? Because a different compliance reasons and things like that. But if I'm taking trades over in my live account, okay, in my funded accounts and so on, okay? And I may do different position size depending on account size. It's a great question, okay? What I'm trying to demonstrate though is entries, exit, trade management, pictures that I'm using in order to execute the trade in a live market condition, okay? Now you determine if you want to stay in a live condition or if you want to take simulate. And I encourage you to test everything that I'm sharing, okay? Does it work? Being able to see it work and fit within my trading plan, that's what gives us the confidence to then start to move a little closer to verifying that information, okay? There's way too much stuff out there right now that people are doing fake stuff, and the emotions are not as strong when you're using this. Therefore, I can be very calm and teaching you what to look for on the price chart for a potential trade.
Order filled.
Okay, we just got hit on our nat gas, and as I'm looking up where my stop, I got $60 risk on that for 1 micro. Okay, so I can go up to $150 based on my personal trading plan. So I can sell another, or sorry, yeah, sell one more micro
Order filled.
and then come back up here, place my stop. My max risk on the trade is 120 bucks. Okay. And that's my stop loss up here. My potential reward is down much further. Okay. All right. So we are in that. Yeah, I had to, based on the S&P and on gold, I had to I couldn't make more than a certain amount on a couple of the trades, and I was pushing that limit yesterday, especially on the gold trade. And like some of the rules for some prop firms is when you're doing an evaluation account, you can't make more than 50% of the evaluation price. So if you're trying to make $3,000 or $6,000 to pass your evaluation, okay, if I made more than $1,500 on that trade, okay, then I would have to do that again and again, okay? So, excellent. Okay, so we're still approaching some levels here on the S&P, which are fair value gaps. I'm not looking to short because I understand because I have a good clear picture of the map. And once you study this map, the accumulation area price often goes above the accumulation area for hitting the profit target. Now, keep in mind, this is the Asian, London, and first part of the New York session. It is rapidly expanding. After noontime, Eastern, markets may just be choppy and sideways. That's when the London closes. Okay. And if you look over the time frames here, you'll see the last part of the New York session, Asian, London, and then the last part of the London session is where we started that manipulation. And it went through the Asian session and so on, and part of the New York. So it's important when you're using the AMD is to locate the different session times, okay? Oh, thank you. Appreciate that. Yeah, there's a lot to learn. In our pre-market routine, we talked about this, okay? Now, this has been, I think, most of the week. Did you notice that the S&P, NASDAQ, Russell, and the Dow, they kind of all scrambled different ways, okay? But last night's overnight session, okay, we made an outside day, but the price patterns on a 5-minute chart, they all started to correlate, okay? Now, when all the price patterns started to correlate, we knew that the banks and institutions were starting to jump in a broad market, okay? We weren't just looking at one index, we were looking at many, okay? Pre-market trend was trading at 1.66 as the VIX was lower by 1.5. The trend in the VIX are indication of bank and institutions stepping in and buying, okay? Microsoft hit strong demand. Oracle may also see a big price movement up. It completed at eighth session lower. Okay. Amazon will be in the spotlight as price drops after earnings, and that should be Amazon. Watch for the 191-ish price level. Okay. Now, all of these stocks here are large market cap weighted stocks. And that's important to know because the S&P, NASDAQ, and Russell are market capitalization weighted indexes. The Dow is a price weighted index where things tend to have an equal weight between each other. That's why we do the cash versus cash value, fair value analysis there. Bitcoin was making an attempt to move up. We haven't gone back up to Bitcoin. Bitcoin making a beautiful move up. I did take a position on Bitcoin micro Bitcoin futures last night. We got 2 micros on that. Another important fact I want to bring in here, okay? I don't know if I posted it. The current administration buys low and sells the highs, okay? May not be selling the stock themselves, but using options. As you know, with this current administration, it is buying into big companies. It owns a lot, like 10% of Intel. It owns some of Oracle. Okay, so I don't know if anybody remembers the Trump Trading Academy. Okay, this was back in the day. He had a very good trading academy that it was a business. Okay, and it kind of went away after a while, but it was a very good education. Kind of took a lot out there. Now, the media reports events not before, but after, and you have to take that into consideration. This was what the media headlines for today. 10 biggest mistakes. Oracle stock suffers. Microsoft just lost a big, okay, sinking stocks. Bitcoin suffers. 10 industrial stocks look ripe. Okay, Uber's cheap. Okay, all of this was heavily tilted towards the negative side. Okay, Amazon slumps. Tech wreck. When you start seeing a lot of negative press out there, you start looking for the buying opportunity because the major markets are, okay? The players are. All right, so we're getting some pullback. We still have an opportunity at 24,816. I may have gotten out of gold too soon. Yeah. Coulda, woulda, shoulda. But once you know that risk is bigger than your intended plan, just step out of it. Because if you're not prepared to take that stop mentally, it'll wreck your whole day. Okay. What else are we in? Okay, we're still playing the S&P. We are in the nat gas. Okay. My stop loss is in place and I'm taking a little heat on that one. Okay. All right. But the heat I'm taking is managed. I have maximum drawdown of $121. Oh, thank you. Yeah, you don't want to miss that pre-market routine because the things that I'm mentioning, the things that I'm walking through all of here, okay, this is just kind of a summary of the pre-market prep that I do each morning to be prepared for students to learn and become successful, okay? And if you see me doing it and going through it, and you have questions about why I'm checking those things, okay, this is going to be the opportunity to see all the things that we look at, okay, including patterns and stuff. And after all, why do we use the pre-mark or the prior sessions high and low? Well, we need to determine if we're inside or outside the prior sessions range. There are different trading environments when we're inside versus outside. Okay. It's only to get you familiar with the products you are trading. See, part of what we're looking for today, notice the Globex range is 120 points. The daily ATR is 108 points. When the Globex range is greater than 70% of the daily ATR, often the bull trap or the bear trap become a good trade opportunity, okay? So if we adjust the time frame, we might be looking at that bear trap, or sorry, bull trap, where price breaks above the Globex high. We find the first supply zone above the Globex high. You might need to adjust your time frame, okay, to find that, to get that first profit target or area, okay? Now, these are different strategies that tend to work over and over again, where we find some unfilled buy or sell orders. Okay. Further analysis on that is that often we don't get a very big reversal pattern when we're in accumulation area. Price generally travels through that. Okay. All right. So as the morning is progressing here, we are looking for an opportunity. Let's just go ahead and take it. I'm going to close this trade down.
Order filled.
And we're going to set up our S&P trade. Okay, so candle number one, candle two, candle three for the fair value gap in context of a trend. Okay, 68.76 quarter. Starting off with 2 micros. Stop loss going to be the lower candle in one, 68.52. Okay. You can bring in all the other analysis. Well, we're in an uptrend. We're supposed to buy it, buy on the dip. Okay, so where's the dip potential? Okay. Let's double check that. 68.77. Okay. What did we get in? Still in that gas. Okay. Oh, there we go. We just came down and got an NQ. Okay, take a moment. Look where your stop loss is. Understand where that dollar amount is on that, 747. Okay. Now, based on what I was telling you earlier, my stop loss is greater than the 150 that I was planning on. Okay. So I got two micros. I can eliminate one to stay within the trade, or I can accept the risk. Okay. We just had consumer sentiment. That was last month consumer sentiment report that came out, not this month. This will become my first target as price starts coming back up, 863. We haven't looked at the Russell. Russell's doing nicely today. Now, I appreciate all the questions in the chat. You know, you can. Where'd they go? Please ask questions. I mean, the only reason folks come looking for what we do is if they're looking for information. Okay, they're looking to better their trading style. Anytime you are approaching somebody's way of looking at the market, evaluating, you need to ask them questions. Okay. I'm not going to get offended by the questions you're asking. Okay. I've been doing this a while. I do understand sometimes the intent behind the questions. And sometimes people just look to discredit you and, you know. But how many folks out there are really teaching you what to look for? Okay. How many are taking live trading? Okay. Now I take my personal trades in a different trading account. Okay. I don't take personal trades on when I'm teaching. Okay. So it's okay. Ask away.
Order filled.
What do we get? Oh, we just got into the S&P. Okay. Let's come back in, put our protective stop loss. Stop loss, 68.52. Okay, it's in place. We have $252 risk on the trade. Our profit potential based on the bigger picture is up at 69.70. Okay. You can see that these levels here do have some unfilled orders at these points or more buy orders coming in. Okay. What remains to be seen is if there's enough to change and resume the trend. Okay. Price drops to find buyers. Price rallies to find sellers. Okay. So as we learn to buy on the dip or buy on the pullbacks, we have to have a very specific picture and of the trade opportunity, but also of the map and getting an idea where price is trading up to. Okay. I mean, this was a kind of one of those, and what we train everybody on is finding those picture perfect past trade setups. Oh, where can we put this? Let's put it over here. Using a template, we can see the accumulation, we can see the manipulation, and we can now see the distribution. Our targeted range is going to be back above the accumulation area. How do we splice into that move when it's already underway? Well, you determine if the momentum is going, use the fair value gap as a trade entry and risk management. Okay. Size your position according to your trading plan and your personal risk parameters, dollar risk. Okay. And stick to that. Okay. Ooh, almost got us. We do have a fair value gap to the upside. Still not out of the woods. I could still lose on the trade. So what we need to see is right now things are getting quiet on the tick Q. We need to see a little more upticks come into play at this point. You would also be looking to see if the Qs are bouncing. Remember, stocks move first, exchange traded fund moves second, and then the futures adjust to that. If you put your stop anywhere else but the low of candle one, you're taking on additional risk. Okay. And when you saw that red on the screen, trust your gut feeling. If that didn't feel good, if you didn't like it, you now have a small chance to get out at a small break even or a small profit. Then you can wait for a better trade setup. That's totally your call. But if you choose to hold on to the trade, re-look at the dollar risk on that and say, am I prepared for that dollar risk? That emotion you felt when everything was red at the moment, okay, and if it was like, oh crap, I'm going to lose money again, you got some green, get out. Price is now reacting back up to another fair value gap. This is a place where we should reassess and potentially take a little profit. Okay, so I'm going to step out. Okay,
Order filled.
and also trading live in front of people, even though it may be in a simulated account. Okay, you still want to be right. Go ES. So hopefully you're picking up some clues, some pictures, some information of how a very specific trading plan, a method approach, okay? But the method and approach must have a tradable entry and risk management in the trade. All trades I've taken today are very small positions, okay? 1 or 2 micros. That's what I can handle. That's what my prop accounts can handle. Okay. I can't have big drawdowns. So I work within the parameters. Amazon approaching. Oh, we're at 202. We still got a little bit to go. Okay. Are you guys liking this? Okay. I do encourage everybody to look at our schedule. I think there's a link on the in the chat room for our promotion for the pre-market routine, where we can go into great detail and talking about all the little things that we look at, document, test, okay, in order to participate in the markets. or at least have a good idea of what we're participating in. Yeah, I got out way too soon. How you doing, Silk? Are you still in there, S&P? Would you take a profit? That was a beautiful move. How many points was that? Yeah, the entry was right about 83. Well, almost a 100-point move on the S&P. Woo! Russell. Russell on a 20-minute chart has come just bouncing off of that fair value gap. Okay. As we progress through the rest of the trading day, what should we be expecting? Did the Asian London session have an expansion or was it a contraction? Kind of like, was it an accumulation or was it an expanding market? So the time frame we have left for some good possible swings in price is getting very limited. After 12 Eastern, you may start to see that the markets start trading in a range. That's when the London market closes. The Asian and London market session today expanded in a strong way. Therefore, the end of the New York session, or sorry, towards the latter part of the day in the New York session, we can expect choppy market conditions. Now, some traders are very well versed in trading the choppy markets. They take small hits, they make small gains, back and forth, back and forth. Okay? But don't get chopped up in the sideways market thinking everything is still going to be bullish. This is why we take into account what happened during the Asian and London session to help us anticipate what's going on in the New York session and what the potential session could do. Okay. Now, as we understand that on the map and we start looking at that, and we're anticipating that after noon Eastern that we're going to be in a sideways channel, okay, we could be making another accumulation phase and price could either drop or rally for manipulation, okay? Our additional trade setups that we have out there, we still have Swiss franc, okay, it's in the accumulation on a 60-minute chart. Euro in accumulation on a 60-minute chart. Aussie dollar approaching, it's in a supply zone, and we do have a fair value gap on that about 701. Okay. We're seeing that we did have resistance on the Japanese yen, but the more it hangs out in this area, it is going sideways. It also is making that accumulation. So what we've learned today and this week and going forward here is that the accumulation areas are, in fact, the start of a sequence of price moves. If price drops, it's faking left to go right. Okay, think about it as your opponent on the playing field. Okay. Yeah, momentum is slowing down. You're seeing it. But we also anticipated it too, didn't we? Okay. So as that momentum, you're very sensitive to that. That's an awesome thing to be sensitive of that. Okay. Is you're noticing things are changing. But what are they going to change into? Are they change into more trading opportunities or a more choppy trading environment? Okay. And that's one thing that I had overlooked a lot of years is not knowing what to expect next. Richard Wyckoff opened my eyes to a lot of that. And what you also noticed is that as Richard Wyckoff was doing his teaching and studying and so on in his presentations, Ralph Nelson Elliott was out there, H.M. Gartley was out there, W.D. Gann was out there. He never downplayed anybody's way of looking at the market. When you start looking at the sequence of events, you also start to notice that during this distribution, and what Wyckoff calls this is a spring reversal, okay, is that this is where Elliott made his money. He let all of this happen before he started participating in this. Okay. So Elliott wave techniques, patterns, picture comes into play a lot. You have a reversal, then you have the wave one, wave two, and so on and so forth. And of course, the variations. This is a nice expanded leg. Okay. So for those that are Elliotticians, okay, for those that are harmonic or Gartley patterns, you can see the patterns that are put in there. My friend Scott Carney, okay, Scott and I go way back, many years, okay. I loved the way his approach was, okay, but I never knew where to anticipate the trade, okay. And once you start seeing the harmonic patterns in here, you start seeing and expecting or verifying the Elliott wave patterns when it happens most, when we have reversal, inverse head and shoulders or head and shoulders. I mean, all of it overlaps each other. Okay. But it's the sequence of events that point you in the right direction. Okay. Now, once you have the picture and you verified the picture on the chart and you know what you're looking for, you have to apply it. Well, in manipulation plays, we apply our trades a little differently, having to give ourselves much bigger room so we have smaller size. Okay. During the distribution phase, you can remain the same size because the consistency of the trade is much easier to follow. Now, that doesn't mean you won't get stopped out, okay, or that you'll make money on every trade. I don't want to imply that. Implied is that during the distribution phase, trades are easier and the longevity of a trade, you can stay in and feel more comfortable. Have you ever had that trade you just took and it just worked out beautifully? You had no fear. Everything was just following through. But you find it very hard to repeat that, don't you? It's because you don't know where the map is. Okay. Understanding some of the teachings from Richard Wyckoff, the sequence of patterns and so on is very eye-opening. Everything starts with that accumulation. Okay. That's why I pointed out a couple of ones to watch for: Japanese yen, Swiss franc, euro. Okay. Those are all in getting ready. Now, if the manipulation is to the downside, the bigger distribution is going to be back to the upside. If manipulation's to the upside, the bigger play is to take it down. Okay. You can use things outside the chart, like the US dollar, to see that it trades inverse of what's going on here. Anybody still in a natural gas trade? It moves a little slower. But does it move the way we're anticipating? Just got the manipulation. So what are we looking for? The distribution phase now. But we all have to manage the risk. Profit potential, the other side of the accumulation. So hopefully what you're seeing is this is a very good testimony of taking trades, teaching, along with application, very important. And I'd like to invite you all to take a look at our live trading room. If you want to sample that, please reach out to the admin at themarketinstitution.com. We can get you a little one-day pass if you want to participate in that. But it's pretty much what we're doing here in the live trading or in our live stream. Okay. There's not many traders out there right now or teachers that will do this type of trading with you. Okay. Or at least they won't teach you these things. So if you find it's a good fit for your learning style, dig deeper, test us out. Not asking you to trust us, just asking you to help verify. What are we in? We just have Bitcoin, S&P. Yeah, I expect some pretty big things on Bitcoin. With this administration, have they created a strategic reserve with all the things being politically happening? A lot of Bitcoin has been seized from those people that have been arrested and prosecuted. Okay. Our current administration buys low and sells high, especially in these strategic investments for the American people. Never bet against up any president when they're in office. They control the markets. Okay. And that's just from 30 years experience watching all these different presidents go through. Okay. All right. So another mention, sometimes you're going to have two fair value gaps on top of each other. Mark them both. Okay. If there's really strong momentum, you're going to hit the first one and take the trade. If there's a little uncertainty, always go with the one closer to the origin of the move up. Okay. But get comfortable utilizing the fair value gap as a tradable entry when stock or futures or any product is making a higher lows, higher highs, or lower highs, lower lows. Okay. Amazon's had quite a volatile morning. And if Amazon is setting to go back up, we've made a higher low. And look for that trade entry. So my hope is, and when we're sharing this information, is that it is helping you get a better picture of what's going on. I do hang out in our Discord room, and we have one of our students, Wes. He also hangs out there for any questions, comments, things like that. Need somebody to trade with. Hi, Robert. It is possible to make a living trading. Is it easy? Not in the beginning, but they sure make it look easy, don't they? I think one of the things that traders struggle with the most is trading by themselves. As I was just mentioning, uh, the Discord room, having a place to talk, express ideas, okay? Understanding your trade entries and when those trade entries are best utilized, okay? I mentioned our leg base group of candles as a tradable entry where we can manage risk, okay? And I mentioned the fair value gap. Those are my two entry types, okay? Now the entry types are also based off of taken entries, what type of entries be taken, whether we're in a manipulation phase or a distribution phase. Yeah, Robert, find what you're comfortable with, okay? Sometimes people are comfortable with somebody that speaks fast and loud and just making a lot of money and, big trades, but you can never replicate what they're doing because they're not teaching, they're just showing you what they do, okay? Throughout our presentations, I hope to be showing you what we're doing, how we apply it, okay, to help you achieve your goals. That's how we grow our business, is that if you're successful, fantastic. Okay. If you're successful, then it shows with other people. Okay. Other people start looking, hey, what are you doing? How are you doing that? Okay. And then you can direct them to, well, you can direct them to us. That would be fantastic. But anytime that you're looking at a trading strategy or an instructor to learn from, do your due diligence. Okay. Is the instructor going to answer questions or just make you feel silly in front of everybody? Okay. Is he educating you? Is he encouraging you to show you how to find the information yourself? Okay. So we're happy to step in that place if you feel that that's a good fit. Just reach out. We work with everybody. We're starting to run, I'm looking at a little larger time frame right now. We still have more upside on the NQ. The Dow, we have finished that distribution phase. Price has made it back above the accumulation. We may have a little bit more left on the S&P and the NQ, but as for the Russell and the Dow, we're pretty much at the end of this run. And what we could expect is a probably be more pronounced anywhere going from the last part of the London session, which we're getting close to, okay, into the rest of the New York session, we start to make another accumulation area. In that accumulation area, prices go back and forth, okay, and doesn't often trend. And if you're going to still stick with the trend, the NASDAQ and the S&P have a little bit more to go, but once they start getting over that accumulation area, it's time to just anticipate the sideways market. Yeah, I understand chickening out because I started buying some of that Bitcoin and some other cryptos as they were sold off, mainly because of the strategic reserve. Okay. And understanding this administration when they buy and when they sell. Okay. And then for some reason, I started remembering the Trump University about trading because I knew a couple of the instructors back in the day, and they utilize all of that. They utilize options. Okay. They're not necessarily selling the stock and buying the stock back and forth because that would be, you know, it would have a greater influence on it. Okay. But the understanding how they hedge and protect themselves for that volatility, they do have a lot of inside information. Okay. Follow what he's doing. Okay. All right. We're still in the S&P. I'm still looking for that profit target above the 50-day moving average. And these are things that we pointed out as well, is when price gets to the or below the 50-day moving average, you can go back and verify information. Count the average number of days that price closes below, and then we get that explosive candle back up. And it's usually 2 to 3 candles that close below the 50 moving average, and then you get an explosive move up. Okay. Yeah, we would have gotten stopped out if we didn't take that profit there. So I am going to end our live stream today. We do have Mastering the Charts recap and review. And for those who don't know what that is, the recap and review is where we go over what we did in our live trading rooms for the past week. Okay. We got a little bit more to cover this time. I'll also direct you out to the TMI community room. And if you come down Mastering the Charts recap and review, and this is for those that are in YouTube that want to do a little more digging and investigating, okay, is look at the Mastering the Charts recap and review. Okay, we post these, and then you can go through and you can see many different trades, our pre-market routine, what our futures trade setup was, and then you can see what we did in our live trading room. Win or lose, okay? This is a great recap of that. The other thing that I'll point out in our Mastering the Charts recap and review, if you want to look through it, is all of our notes that are taken. This is taken by the team, okay? My support team goes through and says, okay, this is what he said. What's the market environment? What's the tone? Okay, here are our notes through the session. Okay, what are we looking at? What are we monitoring outside the price chart to give us that bias or that direction in the trade? These are all the things that part of that pre-market routine course that we're going to be doing later this month. Okay, so take a moment, go out and look at our past Mastering the Charts recap and review. And as we go into that today, and we'll start that in about an hour, we're not going to have a lot of trading because we're going to be mostly just kind of chopping back and forth during that. Okay. At least on the equity indexes. We'll be able to re-verify some of the trades that we've taken and stayed within on these. I hope you all had a wonderful day, and leave us a comment, like, share, okay, all that fun stuff. Let us know what you think. Okay. I hope you have the rest of the day being a wonderful trading day, and just be safe. Always confirm, okay? If you like what you see, then dig a little deeper about what we do. Okay. There's a lot of information in our Discord room to where you can verify and see if this is a good fit for you. Okay. Anyways, gotta hop. We'll see you Monday in our live trading room. And of course, throughout the week, we do have our community rooms and such going on too. Don't forget to get signed up for the mastering or get signed up for the pre-market routine course. It's going to be happening at the end of the month. Okay. It's only $99 for the early bird signups. Okay. 2 days. Have a great day, everybody. Thank you, team, for being here. And thanks, Harvey, for taking all the pictures of our successful trades.